As I said, we look at things slightly differently. And it's worth actually saying to ourselves, and this is a long slide, I won't go through the whole slide, it will be in your packs, but there are 4 aspects to payment. There's form factor, we've talked about mobile. There's channel, we've talked about omni-channel. The payment journey, we've talked about social media in the past. And how do you make money from it? And we've heard about interchange fee regulation, which means that the 1970s model, maybe 1980s, even 1990s model of cards being funded effectively through an interchange model is now clearly something that's in the past and may have even been in the past if there hadn't been the interchange fee regulation because of competitors coming into that space. But how do you make money out of payments today? And increasingly money is being made through data. So you can see on the right hand side what that means, and you see some of the buzzwords which I'll take you through into the next slide. Again, a fussy slide, and I don't intend to spend a great deal of time working you through this, but if you are to analyse what is going on and what is going to happen over the next 10 years, you need to understand what's actually happening in the wider world. Payments, and Olivier mentioned it, payments is not something that's discrete. As Liz said, payment is something you really don't want to do. You want to go on the underground, you want to buy that car, you don't want to pay, actually. Payment is simply a part of purchasing. So you see all the other things that are going on, and we've talked about a number of those aspects, and continued urbanisation is quite an important part of what's happening in society. Clearly, the contactless experience on the London Underground may not work as effectively in a small town. So there are some things that work in an urban environment don't work as well in small towns. But you can see some of the big changes that are going on in society. What we've done is map those against the different aspects of payments and come up with a number of things that we think are actually really fundamental to the change that's going on in payments and how those social changes affect the market that we're all in, which I'm assuming by looking at the people coming here is mainly banking and payments. So what do I mean by multi-source data for AI? Well, I mean data. I mean, how do you get all that data that's in the cloud and give the mass market customer the type of experience that we currently only offer to private banking clients? How do we make that experience so bespoke, so useful, that we're making it specific to you and not charging you as if you were a private banking customer? By a payments layer, we've heard about PSD2 and TPPs. That's sort of what I mean by that. Does PSD2 make that happen? No. Does it provide a regulatory framework for that to happen? Yes. Would it have happened anyway? Don't know. I think it possibly would have done. I think innovation happens irrespective of regulation, but I think in this respect, regulation is an enabler of that change. It does help it to happen. Whether it will speed it up remains to be seen. Sharing economy, I know that I believe that there's a taxi driver strike in another European capital. Uber is a big thing around the sharing economy. We've heard of other examples of the sharing economy. If I'm in London on the tube, I'm regularly seeing things saying, why have you bought a car? Why don't you share one? I'm not likely to see that in my small town I live in central England. It's not really practical to share a car in a place that only has a few people living in it, where we actually probably do use our car a lot more than if you live in London. Purchasing replaces paying. Again, Liz touched on this. It's intrinsic, the payment becoming intrinsic to that purchase experience. If I go into a supermarket, the worst bit of my experience is payment. I choose my goods, then I queue. I don't want to do that. I don't know if anyone's been to London Bridge Station in the UK. It's an awful experience, particularly if you don't have a season ticket. You queue at a long line of people trying to buy your ticket. You miss 2 trains while you're doing it in order to pay by card. Why can't we make that more easy? Why can't you just get on the train? Just buyers and sellers. So what I mean by that is, at the moment, I put that purchase journey up there with acquirers and merchants and issuers and cardholders. But actually, it's just somebody buying something from somebody else. And the distinction between a merchant and a cardholder, I think, is something for the past. Now, what that does is it gives you a little bit more information about exactly what we think. And I've explained that in my words. This is words put together by people in my strategy team who are far more eloquent and capable at doing PowerPoint graphics than I am. But what I thought I would do is just go into what this means for regulation. I'm conscious that I only get a certain amount of time. So I have a 7-point plan here. Innovation needs certainty. Some people have heard me talk in the past about the interchange fee regulation. And I was at pains not to say it's bad, it's good, it's the right number, it's the wrong number. Because frankly, I did not know if the numbers being proposed were the right numbers or the wrong numbers. But what I do know is if you don't know what the regulatory environment is going to look like, you don't want to innovate, you don't want to invest, you want certainty about the future. And I think that's what a lot of people are crying out for. And that's why one of the plus points of the interchange fee regulation, accepting that there are still some areas which need refinement around domestic debit, where there is still uncertainty about exactly what that will look like in different domestic markets. But having that certainty is vital to know if you're going to invest in a faster payments, pay by bank system, or if you're going to invest, for example, in a pay tag or a BPay wallet solution like Barclays has done. So you need that certainty. You need to know what the regulatory landscape is going to look like. Consumer, not product regulatory focus. If I look back at retail financial services, if I look back at the range of regulation that's occurred, it does tend to be product focused. There's a payments account directive, there's a payments PSD2 and PSD1, there's a mortgage credit directive, there's a consumer credit directive, all about different products and how we're going to regulate those individual products. There's even MIF, which focuses on cards and card-based payments, but not on other forms of payment. Very product focused. And as you see the blurring of lines between different products, and you end up actually talking about the consumer experience and the service the consumer is getting, we need to start to think about what is good and right for the consumer in all of this, irrespective of the form factor, the channel, the product, the way they choose to interact with a company. So I think it's very important we get that consumer focus rather than product focus. The importance of trust. I'm anticipating a question of a bank of when are all these P2P banks going to take over? How are we going? What about all these different TPPs? Are they going to eat your lunch? And when is it going to happen? And what I always come back to is the importance of trust. Barclays has been here for 326 years. And there's a lot of value in being a bank for 326 years. Fundamentally, we do three things as a bank. We hold on to people's money, we lend that money to other people to help them fulfill their aspirations, and we move money around. And I think we're pretty good at that. And I think, and I know from research that we've done, that consumers trust us to do that. They trust us to hold on to their money. They trust us to do things in the right way. And I think that's vitally important as we see the emerging world move forward. That is not to say that other companies are not going to eat some of our lunch. We're not scared of those companies. We say, bring them on. Competition is good for us. The only thing that will hold us back is being able to innovate at the speed of those new competitors. And that's something we're well aware of and something we're working on. Safety and security. Again, we've heard a lot about TPPs. And if there is criticism, it is often about who's liable if things go wrong. What about sharing of credentials? What does this mean for the safety and security of the system and the payment system if you allow third parties to come in and see that data and access that system? And I say that's absolutely vitally important. We do need to ensure that those funds are being moved carefully and safely, and we need to ensure that people's personal credentials are safe, that having access whilst being the right thing and a good thing for consumers and encouraging more competition. Whilst that's good, we've got to make sure that it doesn't allow people's credentials to be used in the wrong way by the wrong type of people. And I'm confident that the EBA will look at this and ensure that the solutions it comes up with when it develops regulatory technical standards around this will ensure that credentials are safe and secure. A sandbox approach aligned to consistency. What do I mean by that? If you'd have seen, a lot of banks will put the words level playing field up there, and I totally understand why we do that. And I'm not saying we should have an unlevel playing field by any stretch of the imagination. So there needs to be consistent regulation of a bank as opposed to another organisation that's competing in the same space. But we also need to accept that in a period where there is significant innovation, that we have to allow limited sandbox approach to financial technology. So fintech firms can come in and try things with a ring fence around them to enable them to do those things. Whether that's a new fintech firm or an existing incumbent bank, to do something different and in a different way, it needs to have something from the regulators that enables them to test and learn from that experience. Think global, think standards, not solutions. There's often, in regulators and legislators' minds, a willingness or a desire to come out with the answer to the problem. And I think that often means that we end up with a solution to a problem that's long since gone or long since evolved. And isn't it better to think global? By that I mean, let's make sure, as we develop the regulatory technical standards allowing TPPs to do what they want to do, that allows that could be a set of standards that work across the world and is not just something that works in the EU. And we only want to do this once. I'm aware that because a Barclays member chairs, or has chaired, the API working group in the UK, that there's work going on in the UK around APIs allowing third parties access to certain bank account information. And we need to ensure that there's a once-only set of standards around that kind of access. But its standards are vitally important. So as instant payments is developed within SEPA, we need to ensure that other countries who may not be part of SEPA are able to let their customers use the functionality. So the standards that enable interoperability are vital. Accessibility and inclusion. Now, when I wrote that, I was worried I'd put that last, because actually I don't believe it should be at the bottom of this page. It should be much nearer the top. If you look at my first couple of lines around digital revolution, third industrial revolution, if you look at the industrial revolution and the agricultural revolution, both of those left many people behind. And some people were very disaffected and disenfranchised by those revolutions. We need to make sure, people in this room, legislators, regulators, need to make sure that as we move to a digital world, that we don't leave people behind. That means making sure that we design with accessibility in design and not as an afterthought of design. That we make sure that we include everybody, whether they're vulnerable customers, whether they're older customers, whether they're younger customers, whoever, that we include people in the design and we include their desires and their demands as we develop the new world. And it means offering choice. So if we do want to move to digital, it doesn't mean switching off the manual. It doesn't mean turning off bricks and mortar. It means ensuring that customers can choose whether they want to participate or not. I can see the clock ticking, even though there's not a real clock, it's an arm. So that is it. My final point, a different world requires a different approach. Thank you very much.